Hello, everybody, and welcome to the Plus3 Futures and Commodities Show. It is Friday, November 4th. Hard to believe it's November, but yes, it's November. We're recording Friday evening after the market's closed. My name is Ben Maldonado. As always, I'm here with my partner, Barrie Hederachi. How you doing, Barrie?
Doing great, doing great.
It was a crazy week. In the review for the charts, this is the time when we talk about the things we're going to cover. We're going to go over almost every single commodity that I follow. We're going to review wheat, corn, soybeans, gold, silver, copper, crude, nat gas, sugar, cotton, cocoa, coffee. So the
Wow.
only one I'm not going to do is bonds because you cover it and there's nothing dramatic happening there yet. I know
Other
you're
than going straight down.
yeah, that's true. You're going to be covering
Yeah.
ES, gold, crude oil, bonds, dollar, euro, and copper as well. And also we're going to do NQ. And here we're looking at Bitcoin. Just before the show, Barrie and I were talking. I was going to say I want to call it boring coin because it just continues to have tiny bars, go sideways. It did kick up, a little bit here in this bar here, right at timing. But again, the moves are muted. We've been stuck in this essentially 1/4 of a square from here to here since August.
Yeah.
So not much to do. The outlook is still, 9 to 12,000 is the target. It's just a matter of, until it gets above this full square, it's there's nothing bullish about it yet. And until it gets below that half square, it's basically been grinding in this little tight quadrant. Not much else to add there. The levels, we were talking about the levels here. All the levels are on a Google Doc spreadsheet that we post the link to when we post the video. And the interesting thing this week, I put the date of last change when I changed the ranges for the markets because of movement. Tons of markets changed this week. 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 markets changed their levels. So all those levels are available there. If you don't pick them up, when we're going through the charts, you can always, click the link and go to the spreadsheet and get it. So a lot to cover today, Barrie. Why don't we flip it over to you and jump right in on the big six here.
All right, let's do that.
There's the devil.
All right, let's just pick it up where we left off last week. We talked about this 28.25 area being sort of a balance point, right there.
38.25. Yep.
38.25. And you can tell it's Friday afternoon. 38.25 being a balance point. We're 120 degrees down. This area here, we really needed to hold above if the market was strong. Clearly, market wasn't strong enough. We did meet the ABCD that we had put in place. I don't know if you guys can see that. So we did complete that and even had a little bit of a false break. And of course, and I posted that on Twitter, and both of us normally post things in real time. And well, starting Wednesday, we broke through and basically we're under 38.25 now. And also something to notice is when we took off, we saw this ABCD completion coming up as a potential termination point, but we also had this 39.40 being the next level of resistance. And you can see we couldn't quite even get to that. I mean, we tried, and looking at the size of steps the market's been taking lately, that I would call that close, since 20 points is nothing these days. So just to keep it simple, I think now that we're below 38.25, we have to call that a weak position. And it's funny where we close, next week being, so important in so many ways, not just cycles, but we have elections and all kinds of other things going on. So we have it closed in a really sort of, I would say in the middle of the range. How about that?
Mm-hmm.
And it really is sort of a middle, but on the weaker side of it, because we did get under 38.25. What do we kind of expect for next week? Well, I think the obvious thing would be expect volatility, and we could get sort of a bounce around in here like a ping pong ball. So be careful with that. And what we're really looking for is to see if we can settle above 38.25 area basis daily. And if we can do that, somehow hang in there. You know, we tried that for a couple of years, but you could couple of bars,
Mm-hmm.
and you can see how weak that was. If you were watching the intraday price action, it just couldn't sort of stay up there. And both of the closes were basically on the lows. And then, you know, starting Wednesday, it just dropped right through. Anything you want to add to that, Ben?
The only thing I'll add is we got a high that came in on the first there, and some of the timing I had similar lengths for these high to low swings.
Mm-hmm.
We did a high to high that was 57 trade dates on the third, so there was some timing in there for that high to high.
Right. Okay, so we could have something here, is what you're saying.
Yep. Mm-hmm.
Okay. Well, we also got about 72 high to high degrees,
Mm-hmm.
and that's no joke. So right there.
Yes,
Okay.
sir.
Yeah, I think that's what I wanted to cover for the daily. This is the 4-hour chart that I shared in real time on Twitter. And if you guys are not following us, you know what, the Twitter links are in the description. And also, if you guys like our work, please remember to click the likes and maybe share the links with other people that might find it useful, and also the alerts to remind you. Anything else, Ben, that they could help us with?
No, that's it.
So anyway, this is the 4-hour ES. You can see we broke over this 38.75 was something we were watching. Mainly it's 3/4 of the square, and there were some other things that came up. And also we had that 360 bars high to high come in right there.
Mm-hmm.
And plus or minus 1 bar. Okay, fair enough. So we had that come in, but we, following that, we really couldn't take out the 38.75, right? You can see how it just sat there. And then we tried to break through. And soon as, that high bar is low got taken out, Ben and I both saw it, and we had posted it prior to that. So that was that. As soon as that reversed and low of the high bar got taken out, we kind of sensed it was a false break. And true to form, we had this really fast move down. Not before it retested 38.75 right there, that couple of days. And then, of course, we had that new spike, but that's okay. And we came down. Now we're stuck sort of under the half the square, the next square down. And 37.87 area is sort of the level we're watching. Mm-hmm. And there's definitely something there. So we have to watch that. Upside, we're watching that 38.25 on the daily. And here, the first sign of life might be, settling above 37.87 or so. Just want to run that by you guys.
Mm-hmm.
But this chart's been really helpful to watch the short-term price action. And let's move on to the weekly. And if you guys haven't been following, check the last 2 or 3 or 4 episodes, because we sort of thread this thing week over week, and it'll be easy to catch up. We had a big low come in right there, and then we had the false break, ran up, really couldn't clear the square 52, which is the weekly square. And I had weekly resistance at 38.96, let's say 97. And, price just couldn't close above it or get above it, or nothing to do with above it. It was basically would push up against it, test it, and then just roll over. And today I was telling Ben, this could have been this could be an outside reversal because we did close fairly below. I mean, it would have been nicer if we closed near the lows, but regardless, it was an outside day with a lot of downward pressure. So that's something to watch. But in the bigger picture, when there's a lot of confusion in the shorter time frames, I always switch up to the larger time frames. And I think earlier this week, and Ben goes, "Hey, what time frame are you watching now?" And I said weekly because everything else is driving you crazy. I mean, if you saw the 4-minute, 5-minute bars, they were nuts. So anyway, here on a weekly basis, long as it's below 38.97, it's still sort of gearing up for momentum, and 35.72 area, this halfway point, is support. Now, if this low goes, then we're going to be in all kinds of trouble. Markets can be in all kinds of trouble. But long as we're above this, we can do a lot of back and forth in here between 38.97 and 35.71, let's say. This low is good. It could give us a leg up into January or something if we can manage to hold together. But in order to do that, we have to see some signs. That's why we're looking at 4-hour levels and daily levels, weekly levels, to help us figure out the direction as soon as possible. Anything else, Ben, on this? Or
just the weekly is currently bearish, the way I read it. And I think your square of 52 is kind of like the bull bear line. We got to get above that.
Right. Yeah, we have to get above that for sure. At least for the bullish sense, we have to stay above this.
Yeah, and my weekly number that we need to get above is like around 38.55, 38.56.
Right in there. Okay.
Yeah, if we can get above that, then there's some hope for the bulls.
And that's just right under the square 52. So we're not even talking about the 4,000 level. We're trying to figure out down here.
Yeah.
So we had 3 weeks up, and we have a correction. We'll see how it goes. But because we're stuck below a couple of numbers that are not too far apart, that's why I'm saying it's possible that we get some volatility in the coming weeks, unless we clear one way or the other. But the clearing has to start with obviously lower time frames. That'll give us the indication towards the tilt. But I tell you what, though, Ben, remember these boxes we drew up for structure in one of the videos?
Yeah.
And I left these 2 boxes here, and approximately it got the range, we really stalled out for a couple of months, really, after hitting that.
No question.
So that's something to watch. We had that cycle that came in. So there's a lot of stuff at the low, and that's why we have to be a little bit cautious about thinking this is just going to wash out. It'll wash out if this gets taken out. And that's not too late, because if this goes, I think there's plenty of room to the downside. But if this holds, there's plenty of room to the upside also. So
true.
We'll see how that goes. Let's go on to bonds. Not much here. We've been, we've been bearish from up here, I think, since we started. Actually, as far as I can remember.
Right.
Anyway, I think the last couple of weeks, it was really this, this 124, 270 degrees down from the 2020 highs up here. And we left it off saying that as long as we're below that, basically, to sell the rallies till we get down into some kind of support, which we haven't yet. And there was this was very, very bearish, what happened here, where the square really didn't hold. And that just opens it up. So I would say just stay with the trend. This is not the time to be a hero. We'll look at the weekly trend. And the thing you were watching for here is a potential square down at 144 degrees down from the high in 2020. and it would be 144 by 144. And that would be, if nothing else, it'll produce it has the potential to produce a fairly decent counter trend, if nothing else. So that 144 we're watching very carefully, and we're expecting the market to be weak up until we get through that. Looking at crude, yay, finally.
Looks good, huh?
Looks good. Nothing to not like here. So, like I said, a lot of the stories about these circles and breakouts and what it means are in some of the older episodes. You guys can go check that. For now, last week we left it off. Basic ideas, after we broke out of the circle, we were looking for a move up, and last week we left it off with this basically almost a $10 spread here, support around 83. Resistance at 91, saying that if we can get above 91, then this is going to start getting some legs and getting some traction, and at least move up, get above 100. And if we manage to settle above up here, because of the overall pattern, I think it has a lot more to run. So I think crude's back on the menu to be traded alongside. I think the consolidation period might be over. Isn't that right, Ben?
Yes, absolutely.
All right. Weekly crude, we had, we came down 45, had support here. Almost too easy, right, Ben? All right. We had support down here, and we were expecting that support to hold. Waiting for the first pullback, trying to see how far from the low the lower low would come in. Came in fairly well, and we were having a nice march back up. So basically, we got ABC in the works for starters, and if this, gets enough momentum, we should see $100 a barrel not too long from now. So,
no, it looks like after today's move, it might be picking up steam.
Yeah, it's good. Look, everything looks good. If it's a nice pause, this is the level we want to take out at some point, right? 96, 97. That's it. After 91, 97 is the key level. That's resistance.
You can see all those lows, in February, March, April.
Back here, yeah.
Yep.
That was a key thing. And remember this lower high coming in right at the square. Very nice. So a lot of good stuff. Yeah, that's kind of it. Well, we do have an ABCD working here. Let's put that on there. That would be right about at 100.
Yep.
Coming in.
99. Yep.
Yeah, right at 99. Fair enough. So we're looking, once it settles up here, we're looking for it to hold 91. And then looks like it's game on. And this 83 was very good, held nicely, very good structure. Everything's okay. Gold.
That had a good day.
Had a good day. I saw something about 300 tons. Maybe that's what it takes. Either way, definitely got a bunch of people off balance because we had a false break here on Thursday.
False break at the low, yeah.
Right? We talk about these all the time, and this is why. And following the false break this morning, boom. So, and you guys know the story. If we can hold above 1646, we're in pretty good shape. Above 1676, it's starting to get it's going to start picking up some momentum, and we'll play it that way. For now, it's, I'd really like to see some, have a few bars above 1676. And that shouldn't be too difficult. We have a pretty good, we had a bunch of highs right there. And so we should be able to make that without a lot of problems. And moving on to the weekly gold. Weekly gold, well, it really still needs to clear this basis weekly. We have the 1651 needed to clear, 1670, this block here. And we were just back and forth through there. Now we're finally maybe clearing out. But that ABCD coming down was rock solid. Hey, Ben, look at that. 3 weeks in a row. 3
And
weeks.
then just that little false break, man. They do
Mhm.
that every time, it
Yeah,
seems like.
it's great. It's great. It's great when you catch them.
Hmm.
So we're looking to see if we can get out on top of 180. That's the next level to watch. That's 1694, let's say. And so next week's price action is really crucial. We'll see how that works out.
See if we can get
it's,
some follow through.
yeah, but the main thing is it's starting to show some life, right? It's starting to show that we could have some kind of a low in place
Mm-hmm.
with that kind of price action. So, and the timing, right? And the pattern, everything kind of sets up. Then we have copper.
Another big day.
Very good day. We had basically this 1330 was the number we've been watching just to keep it simple. And you can see we had, pretty good support there, had a little tap here. And last week's low came in well above that.
Higher. Yep.
Yep. And we broke the trend line. So we were talking about like, if this stuff holds, copper is going to start moving. And there you go. I don't know what else to add to that, Ben.
Had an 8% day. That's what we had.
That's right. And then we have, if you want any, we've been talking about this for weeks and weeks. We were holding above the 90. You can see the last few weeks, right? And I was saying that that's very positive. We held the fork, very positive. And we're looking for you to sort of start clearing to the upside. And of course, copper being copper, did it all in one day.
Right.
So now it looks like it's out of the sort of the muddy, the murky parts. And also, I think it's on the radar, ready to go, ready to trade. A lot of things sort of popped out of the woodwork and sort of calling attention to start trading. So I think next couple of 3 months are going to be busy trading months after a summer of not doing much, right?
Right.
And here's the dollar, true to form. We had a huge square at the high. We had the lower high come in, ABCD correction down. And we were expecting the dollar to find some resistance around 113.75. Couldn't even quite get there. And we left it off by saying, long as it's below the 70 square 75, it's on a weaker footing. Of course, above the half square around 109, it's firm, right? So, resistance here, kind of firm here. And what that kind of recipe gives you is exactly this kind of price action, which is, high volatility in a tight box. And you have to be able to trade that accordingly. Till we clear out this, some of the key levels, I don't think it's time to get it on a trend yet. You know what I mean?
Mm-hmm.
But we see what's forming slowly, right? So, but it's in there. It's on the weak side for short-term trades. That's great. And looking at the weekly, look, this is the big deal. Is this really? That's a big move. And what happens is it happens to us sometimes, not so much now since we check the charts every week. This 90-week cycle is a big deal, and it wouldn't be difficult to imagine that we did end something here, but we want to see a little bit more evidence. But I'm not forgetting. I'm going to remind everybody about this high every week, just so we don't get caught up in the daily volatility, right? And the shorter term stuff. And we did break that very steep channel going up. So something did happen. We can't pretend it's just going to continue to shoot up on the same scale, mainly because the cycle, the 90-week cycle, looks like it had some effect on the market, because it did. Look at it. It's just acting like it hit a brick wall when time showed up, right? It just stopped, and it's kind of reverberating through here. Anyway, so basis weekly is 112 that we're watching. So there's 112, 113, that's sort of the area, and we need to clear it. Right now, we haven't really made up. The dollar hasn't made up its mind to either be above or below. So we're kind of crisscrossing And that happens after a corner usually because it's setting up into another cycle. So I might have to switch the squares and track it. We'll see how that goes. For now, just remember we had a good potential high in place for the dollar, and we're watching the lower time frames to sort of confirm it. And the confirmation here, I mean, this 113 is fairly good. You can sell against that, but really we want this 109 area to be taken out, which is the half square of this last leg up. The 72 was a blow off, 36 bars. So if we can take out this is the quick, like a Fermi test for squares. If with the 50% of that square gets taken out, there's a high probability that we're done with that leg and we're going to do something else for a while.
Mm-hmm.
All right. Next, let's take a look at the euro. Left it off last week. Well, we had the 288 hit, so we were looking for support, and then we were expecting it to at least check the half square right there, or the box that we had in place for the last couple 3 months. And last week we went up there, tried to do it, almost got to the ABCD and sold off. So I think going forward, it's the same kind of a deal. Even though we're making higher lows and we did make some higher highs, it's this area that it needs to clear. So it'll be a good sign that'll be the thing to watch to see if we can actually take it out and kind of get above it. But it's an uphill battle for the euro. There's no question. I don't care how many levels it takes out. So I'd trade that carefully. Looking at the weekly euro, we're just about ready to take out that channel, right? And really kind of battling it out at the 50% of the square, around 99, right around par. So we have to see which way it settles out. This 1/3 did hold the leg down, but it feels like it's not quite enough, even though we had the 90 from here. We'll see how it works, but I'm not quite sold on the upshot yet because we haven't cleared the key levels, but we're cautious because we had a bunch of cycles that expired, including the 90-week cycle. So, and since we don't necessarily always jumping in the corners, we normally try to get the trend. So what we're doing now is just sort of identifying places where the highs and lows potentially came in and looking for the structure to sort of help us navigate the rest of it. Isn't that right, Ben?
Yeah, and one of the things, Barry, take a second and talk about, like, when you see after a big square comes in, like we've had on the dollar, and you see it crisscrossing like a major square. One of the things you and I have always discussed, well, it either turns there or it consolidates and chops, and you could resume the previous trend as well. I don't think we talk enough about how what you do at the end of a cycle. So why don't you share with them a little bit of how you look at this now? What's your thought process on, okay, are we going down, are we going up, or is it possible we could be chopping to decide which way we're going?
Well, once you get a big cycle like this, for sure, you definitely don't want to be trading against that. So if you were long, this would be the area to be covering some of that. And that's one. Now, if you're long from ways down, then obviously you can move up your stops, let's just say around the half square here, down here, and wait and see if this has enough strength to make another leg. And the reason you do that is you want to give it some breathing room and not get too tight. So that just boils down to trading tactics. As far as going back to what you were talking about, once a square comes in, you really want to quickly scale it out and go, okay, is this behaving correctly according to what a square out should produce? So in this case, we would want to see it, if we square it out below the 180, let's say 112, we wanted to see it hit it and maybe do a false break or something, but generally it should be trading lower. The ideal sort of text box is you know, you like here, you go up, you square out, and then you come back, you do a lower high, and then you're done. Boom.
Mhm.
Right. And I mean, that would be the ideal. Like here, square out, pull back, come back and do a high or low, and boom, take off. So here, I feel like we blew through the square. I mean, there was a lot of power coming into it, but more than the price level, I was really watching time, because time, that 90 weeks is fairly important, right? So it's
Right.
not something you just want to throw around. So if you combine the 90 weeks with some kind of a price level, I feel like we did get to the first quarter of the next square, which is fair game, you know, right there. It went right to it. And that's okay. That's a square. And that happens in currencies a lot. And the next thing is to see if we can get under the square. And then you want to see the normal price action. Are we making lower lows, lower highs? And I normally jump into the lower time frames to, like you do, you know, lower time frames to see if the price action is giving, sort of signaling the direction. Again, using the squares and levels that's correct for that time scale. And that's it. And then once momentum kicks in, I mean, at the corner, you don't have momentum going the other way. So you have to sort of wait to see how the pattern sets up. And once it sets up the new trend, new leg, and then you jump in and trade it.
I mean, the big clue for me always at these corners is, and when you have like a line like the 180 there, you know, when you have the square, when you start getting, like when you get your first bar that settles just completely on one side of the square, it's a good clue as to which direction we're going to go. You know, and you can see it's been really difficult to have that done here.
Right, right.
You
So
know,
it means it might not be done.
Right, that's right. It might not be done. If we can settle on top there, we could start another leg. But if we start getting bars that are caught underneath that 180, then you're done. Right. So
yeah, but here, and also it's also market dependent. You know, some markets have certain characteristics, others don't. Like corn trades like corn, and soybeans trade like soybeans. Bonds are very different from the S&P. You know what I mean? So and crude has its own character. So when you start, the nice thing about using squares is if you're just using squares, you're only looking at levels, time and price against the bars. You don't have all the indicators and this and that mess, you know, getting into the system and messing up your perception, I would say.
agreed.
And yeah, I think keeping it simple and price and time is it. So
Amen to that.
All right, I think that's all I got. Let's well, it's not gonna be a boring week, so everybody get some good rest this week.
For sure.
In the meantime, I know you get a packed show, so let's go on and check out all the commodities. Let me put it back to you.
Sounds great.
All right, thanks. Hey Ben, what the heck is this? What's with all the circles, Ben?
Yeah. This is sort of a redo of your a tribute to your crude oil circles. So I put this chart together. This is a weekly chart, and I just want to quickly show it to everybody because we kind of had a pivotal week here last couple of weeks. Barrie, as you know, being the circle master, you know, at these edges here, it's critical what price does and how it reacts. And to boot, we had a full square here at that 38.56 level I was talking about when you were reviewing the ES. So I'm showing this because if you look at how the reactions happen or can happen at these arcs and these circles, you get fast moves, and the setup is there. We tried to push above it during the week. We closed below the full square, and we closed below the circle. So if the circle is going to take effect, you're going to start seeing speed off of here, sort of like this, pushed up, tried to get through, and then you get speed down. Pushed into it, tried to get through, speed down. So it's something to keep an eye on this week. Could get right through, because remember, the next bar is right here. So we'll have a view pretty quickly starting next week what's going to happen with it. So something to watch. Let's go to the regularly scheduled programming of NQ. So it's not a pretty picture. The only thing I think the bulls have their to hang their hat on is that we held the full square, right? As long as we hold this full square, they have hope that we can push up and then finally get above and hold above the half square. So the full square level down here is, call it 10,680. The half square is that 11,280. See, we tried this week, we tried to get above, we tried pushing, and then there's the big Wednesday move down. And then Thursday and Friday, we leaked down and found support here. We're barely above the kind of the low that we saw, in around the 13th of October. Again, if we lose this square here, it's down to the half square next, which is around 10,000. So the key parts are right now, the key points and levels to look at: half square 11,280, full square support at 10,680. Trend line held. That's why I say it's not a pretty picture until we can this coming week get above this. Anything else you're seeing here, Barry, you want to point out?
Well, it's pretty much in the same sort of track as the S&P, except a little bit weaker.
Mm-hmm.
And I think the cycle wise, everything is the same. So we have to see if that low gets taken out. I mean, NQ is clearly looking weaker than the S&P, so we'll have to just play by the numbers.
Yeah, we'll see if it's leading or if it's lagging. We don't know yet, but we'll see.
Yeah.
All right, so now we're going to flip over to the commodities, and we're going to basically take a fast move through all of them, because as I was telling Barry before the show, after my review this afternoon, all of them are worth looking at now, because they're either, some are a little further along in their bottoming process. Others, are making a bottom. Some have made the first thrust up and a pullback. Others have just starting the first thrust up. So we really got to be on alert and really got to watch, because the whole commodity complex is perking up and signaling that the next wave for commodities is coming. Some sooner, some still have work to do, but it's worth it. And I think spending the time and taking a quick roll through. So let's start with the grains. Here's wheat. Wheat and corn we've been covering for a while. We saw this low. We had the first push up. We've had a pullback. Here was that spike on the Russia, getting out of that grain corridor thing, and then they came back, and now it's pulled back. But look, the whole thing is we're putting in a higher low, and we're putting in a higher low, on top of this structure here. So the key level here is the half square, call it 848. Above that, we push up, take this out, and we're off to the races. But wheat looks bullish. Barry, just hop in if you want to add any comments. Otherwise, we'll just roll through to the next one.
Yeah, we need to really clear a little bit higher, maybe a half square. So we'll just wait for that.
Mm-hmm. Here's corn. Again, we talked about markets that resist going down or resist pulling back are sort of stealthily strong, and that's what corn keeps showing us, right? It had that really strong first push up, and now it's just been basically sideways within this half square of this square.
Mm-hmm.
We've got the full square support, half square resistance, tested multiple times. One of these times it's going to bust through, and we should go up and test full square here and then move into the next square. Corn looks bullish. It's sideways correcting, for the last few months, which is always a bullish sign in a bullish market. It can't go down very much. So watching this for the breakout over the half square. Soybeans. Look at what it decided to do today.
Yep.
Busted out of the downtrend. So now, instead of looking at this as kind of, it's a big triangle and we're going to get another push down, with today's move, it sort of tilts the odds to where, okay, we got the low, which came in perfectly on a half square, pushed up, and this structure here was simply, a correction, which gave us a higher low, and now we're pushing up out of that.
Right.
Key thing here, where we really know we're off to the races and we got a tiger by the tail, we take out this half square 1486, settle on top of that, then we're moving. But this is a very positive development with the move we saw today. And I mean, look how it came out of here. Watch these commodities, man. Look at this. Close it near the high, close at the high, close at the high. You see how they just make these big moves like that?
Yeah, yeah.
High, 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 high. So you can see, when you get a daily close at a high, look and see if it's over an important spot. Like this was on top of the full square. Probably on the lower time frame, you could have had a decent buy in here on any kind of intraday pullback, and then you get 2 days of pushing up to the high, pushing up to the high. And what did we do on Friday? Close at the high. Somebody wanted to own beans. All right, let's jump into the next one, which will go to the softs. Sugar. See a pattern here? Close at the high, close at the high, close at the high, close at the high.
And a break.
Yep. Didn't quite get to the high today. We pulled off a little bit, but again, someone's pushing up. This thing has been correcting sideways for months, over a year, if you really look at it. When it breaks out, I mean, it's testing the trend line now, but the thing we really want to see is we want to see it take out and sit on top of this full square, which is, call it 1892. I think the high here was 1894. So, settling on top of there, and then sugar could be ready to run. Love these big bases.
Mm-hmm.
Just got to wait for the breakout. But this was, I mean, let's see, 1, 2, 3, 4 straight days of closing on the highs.
Yeah, yeah.
They're for some reason they were, buying sugar. This is one Barrie and I have been talking about all week. He and I were talking, there was a square out here, 180 by 180 square, and look at what the hell it did for the next 4 days. Notice on the low bar, close near the high, close near the high. This one didn't close near the high, close near the high, close near the high.
Mm-hmm.
This thing's really pushing. So it's sort of like the grains were a few months ago when we talked about it, or crude oil was a few months ago, or copper was a few months ago. You're getting this first strong push out of here, which is generally a good sign that, something changed here. Now we got to see what changed. Is it a huge, sort of swing low change, or is it just, just a little, trading sort of move? And we'll be able to tell when we get the first pullback on this, right? Do we pull back and hold on the half square, or do we make some sort of higher low here? That'll give us the confidence that, okay, something ended here at this square. So we got a fast reaction, and then we start getting price action that supports more of a bullish market. So cotton looks very interesting because of the reaction off of this square and the strong move we're seeing coming up. I know you had some other comments to add on cotton, Barrie. What are you seeing when you look at this chart?
Other than betting the farm, not much.
Yeah, it's a nice.
Well, I think there's a high probability we have a corner in place and just start trading. I think this is on the list to trade.
Yeah.
Alongside. Yeah.
Agreed.
Trade the trend, new trend.
Mm-hmm. Here's an old friend we haven't talked about for a long time, but it's done something it hasn't done in months. And that's make a low, a high, a higher low, and now a higher high. And we're starting to get bars sitting on top of the square that we've been crisscrossing since June.
Yep.
So I'm not saying this thing's ready to take off, it's going to the moon or anything like that, but you need to pay attention when you start seeing this structure. The bigger time frames, the weekly, the monthly, are still caught in triangles. So, you got to be aware of that. But this is how it starts. A false break right here, right? Took out that low and reversed immediately. A pullback, giving you a higher low and now a higher high. It's time to watch cocoa. Not time to bet the farm on it. Not time to, jump in and say, okay, the bull market's in there. We don't have enough evidence. But it's time to pay attention to cocoa.
Mm-hmm. Mm-hmm.
Anything else to add, Barrie? I know this thing's been triangulating for 6-8 years or so.
Yeah, this one I'm not as excited as cotton, but I think we have, like you say, now that we cleared the square, we have to wait for the next pullback and watch that and move with that.
Coffee has had the living crap kicked out of it recently, right? This thing was one of these ones I thought was one of the sideways corrections, right? We were seeing it was going sideways for about a year, and then all of a sudden, bam, 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 bam. But look where it stopped. It did a big ABCD.
Yeah.
Completed here. We stopped on the full square. So now it's time to watch this on lower time frames and see, can we build a base here off of which to start moving? First positive thing would be recapture this half square. This one's early, right? This is really, really early. But look where the low came in, on a square, and look.
Right.
Same area of a low in 2021, in the summer of 2021. The bigger picture also looks really interesting at this standpoint on this one as well. And it is a new month, believe it or not, Barrie. So we're going to have to do the monthly show here fairly soon as well. And you'll see that on the monthly show. So for some reason, all of the softs got activity and money coming into them this week. And you can see it in the charts. Go look at your own charts, look at the shorter time frames, and see what we're talking about. It's time to pay attention there. All right, let's go to the next group. Here's gold. Barrie did a great review of gold. I just wanted to show you a couple things on gold here. One, we talked about the false break. There it is right here. Took out both of these lows by a few pennies. Shot up, closed at the high. Took out all the last 2 weeks worth of price action today with the close. Don't know if that's the bottom, but it's one of those time to pay attention to gold. Time to watch gold, time to see what's happening there. On the higher time frames as well, really important support and resistance on the monthly is at 1668. We closed above it. First time in a long time we could close above that.
Right.
So as Barrie showed you, just corroborating, time to watch gold.
Wink, wink.
Silver, here's one we've been talking about off and on for the last month or so. Big day for silver. Closed at the high. And notice this one didn't even go down and do a false break in here. It did its false break in late August, early September. So it's a little further ahead of gold. And we've gotten a high, a higher low, a higher high, a higher low. Now we're going to push and see if we can make the next higher high. The big test for silver is there's monthly resistance at 2088. And we just got over it today. So we want to see if we can hold. So it's probably somewhere in this area here. Yeah, this is 2077. So 2088 is like right in here. So we're right on that on a monthly basis. We can push above that and then use this as support. Silver's off to the races. But like we talked about, I think it was either last week or the week before, you said, man, I got to watch silver closely because this is a good structure. And this is how it builds. This is how you build off of those spikes, right? And you can see different markets are in different places. Silver's, put in a series of higher highs and higher lows. Coffee's just putting in a low. Gold just put in a low. They're in different stages, but all sort of in this bottoming and beginning to move out of the hole sort of process. Here's one Barrie talked about. Just wanted to show similar structure. This looked, for all intents and purposes, this looked like, oh my God, we got one more push down to go, right? This is triangulating. We're not making much progress. It's winding up. We're going to roll over. Well, that changed today. This is a big breakout.
Yeah. Big one.
The half square is now the key level to watch, which is $3.63, $3.63, right around there. We want to see pullbacks hold on top of that. If not, if it has to come down and test, we just don't want to get too deep into this structure, because then we're back in the wash, back in the backwash. Really, you don't want to be in there. So any pullbacks we want to see, try and hold there. But copper looks really, really bullish. The next important spot, monthly resistance, is 380, which is right about here. So where's 380? Oh, right here, right in this area.
Yeah.
So very, very near this full square up here on my chart. If we can get on the daily, if we can get up and over this, we're at, we're above this whole structure, and then we're ready to build and move. But this was a big, powerful move in copper today. I mean, look, we closed practically on the highs. You covered copper, so we don't have to go into copper much more. Let's go check out the energies. There's crude. Pushed up to an interesting spot on the daily, right at that half square, 93, call it resistance. That's the next level. But look at what we got. We got the low, which we've been calling out. We called it coming into here and said, okay, it's time to watch. Pushed up, couldn't make it the first time, pulled back stopped with a higher low, right in a perfect spot, and now we're pushing again. So this thing could ramp fairly soon. I'll show you one other chart here that I've showed one time before. This is the weekly. And this was a key level here, this 88, 89 level. And for the last couple of weeks, we've been battling at that level and couldn't quite get above it. And today pushed strongly above it and got a close above. So crude looks good for higher prices. And last but not least, let's go to the Widowmaker. Man, look at this. Look at how a daily bar is like a half square here. Boom, 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 boom.
Right.
If you don't have your levels here, you're going to get smoked. Anyway, we called it last week. We said, hey, it's time to watch this. We had a strong move out of the low. The pullbacks this week we're holding here in the half square. And then today we push up and we close right above the full square. So this thing could be off to the races again. As long as we're holding this full square, which is, call it 639, 640. Next level is 7. And the way this thing moves, you could see 760 next week. There'll be some resistance up here. You can see this stuff over here. But gas looks good. It's pushing, pulling back, making higher lows, and making higher highs. The only thing I'd say with this first leg, it looks like we have 3 drives here on this first leg. So maybe we get a little bit of a pullback. So don't freak out if you get a pullback. Just watch the different levels, right? Do you come back to the half square, which would be super bullish?
Right.
580. You could even come back to the full square, and that would still be bullish. But this market looks bid. Anything to add on gas?
Well, I think it's another market to start watching and perhaps start trading to the long side.
And it's really interesting how all of these markets sort of, exploded this week, these commodity markets. Early in the week, it was the grains. Today, it was the metals and the energies. So there's money that's like waiting to gush into these things and is beginning to move in. And I think if we use the levels and if we look and see, are we getting higher highs and higher lows, we can get involved fairly early, with good risk reward ratios. And that's what it's all about. We try and find these corners and places to get in when the momentum has shifted and things have shifted, and it's starting to take place in different stages in different commodities, but it's happening. So exciting times, to say the least. What are you going to be watching closely this week, Barry?
Well,
I think you're going to have to order a couple new monitors, because you're going to need to watch more markets.
I think so. I think everything's on the plate. Some are just starting. Some are midway. Some are, we've been watching for a while, trading the trend. we have to watch everything this week because of all the cycles that are new cycles that are coming in and a lot going on. I think it's a busy week, and all these new commodities that you brought up, all of those things have to be tracked, especially during this time, because we want to see, if the price action is good or not.
Mm-hmm.
Yeah.
Right. Does it justify what we're thinking in terms of these corners and these potential new moves up? Exactly.
Yeah.
We joke about, rest up because it's going to be a crazy week, but Barry, it may be one of those weeks where we have watches where, I'm up all night one night and I got to call you if something's moving, and you're up the next night if something's moving. It may be one of those weeks.
Yeah, like we used to do in Forex a long time ago.
Exactly.
A little bit. Well, it's one of those cases. We definitely have to be watching, and I'm sure you'll be posting stuff on Twitter and keeping everybody up to date. Absolutely. But yeah, I think it's not just this week. I think what we saw this week was, when everything got picked up, a lot of the commodities, I think it could show a potential start of an entire, whole new leg. So I think this is the time to really watch that.
Well, great show today, Barry. Good review, and we'll talk to you everybody soon. Have a good week, everybody. Do rest up because it's going to be busy trading, and you need to have your head on straight for sure. So
yeah, definitely have to be rested for next week.
Amen. We'll talk soon. Thanks, everybody.
Yeah. Thanks, Ben. Have a good week, everybody. Bye-bye.
All right.